I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Tuesday, December 22nd. We've got three markets for you: corn, wheat, and live cattle. Before we get into the charts and the technicals, I wanted to kind of touch on a new Facebook group that we started, Ag Chat Without the BS. For hedgers and traders. Now, we do know that there are plenty of other agricultural Facebook groups out there, some market related, but we think those have gotten a little bit too cluttered, and we want to kind of get rid of the noise and get back to the basics of fundamental and technical analysis and actionable ideas. We know that actionable ideas are what people want, and having a team to bounce ideas off of is important. That's kind of the thesis and thought process behind Blue Line Futures. We wanted to bring that community to life a little bit more for everyone else outside of our clients with this group. So Ag Chat Without the BS for hedgers and traders. We already got some fresh content up here from some new members. Matt Duncan, looks like this is a live cattle chart, and coincidentally we'll be talking about that here in a little bit, but we'll start off with corn futures. This is revisiting a previous tech talk that we did. We had talked about a little bit of a wedge forming and how that typically leads to a breakout or a breakdown. Got that USDA report, not a whole lot of conviction behind it, but we still managed to hold trend line support, and that kind of took us towards this top end of the range, or the old breakdown point here from November 30th. And we decided to get out above there, probably go revisit the contract highs, which is what we've done. And now we're trading at new contract highs. And where do we go from here? Well, we kind of always say that we're in uncharted territory. Finding a meaningful top and meaningful resistance is more or less a fool's errand at this point. Now, a lot of people have reached out to us when we say that and say, well, you can use the continuous chart to find resistance or support levels. In this case, resistance levels. We don't really put a whole lot of weight into those continuous charts because we look at technicals and charts as a roadmap of interactions between buyers and sellers, and in the agricultural commodities, it varies so much month to month and year to year. And it's a lot different than a continuous chart and say something like the S&P, gold, silver, oil, etc. These are highly variant. So take the continuous with a grain of salt, and just remember, top's a process, not necessarily a point. Path of least resistance is still higher here. Previous resistance now becomes support. That comes in from this 435 area to 439. The bulls have full control until we break and close below there. If we were to get down there, potentially we go revisit this, which was, again, previous resistance, now support, and back to this trend line. So that's what we're looking at for corn. Moving over to the wheat market, wheat has been chopping around. We've essentially neutralized our bias after this big move here. That was on the back of that Russian tax headline that bumped us right above the top end of the range. And we're back here again. From a risk-reward perspective, I don't hate selling against this pocket, but you're going to want to keep a really tight leash on it. If we get out above here with any sort of conviction, we'll probably go retest and potentially make new contract highs. So that's going to be something to keep a close eye on. Again, risk reward, I think, favors the sell side up to the 620 level, but you really don't want to give it too much room. Cut your losses early. Four types of trades. There's big winners, small winners, big losers, and small losers. If you cut out the big losers, you give yourself a pretty good chance at having long-term success, so keep that in mind going forward. The other thing we're keeping a close eye on with the wheat market and a lot of the other commodities markets is the U.S. dollar. We did get a little bit of relief here today. We tried to yesterday. It was a failed relief rally attempt. We got actually a little bit more momentum here today. If the dollar does see some relief back up towards this 92, that could be a little bit of a headwind for the commodity markets, I think more specifically wheat. So that is going to be something to keep in mind going forward. Now, wrapping things up with the live cattle market, February live cattle here has, well, actually I think I like that Matt Duncan's chart a little bit better here, so we'll see if we can't pull that up. Kind of failed above the resistance channel that we've got here. Pulled back and now attempting to test the lower end of that. And I wouldn't be surprised to see us continue to consolidate with this holiday trade this week, but eventually I think we're going to probably see a breakout or a breakdown. So near term, I would temper your expectations as we get a little bit closer towards this technical support. We know that the cash market is probably going to firm up a little bit this week, but I do think that a large part of that probably was baked into the cake, looking at the price action that we saw last week despite a softer cash trade. So again, probably a little bit more movement to the downside, but temper your expectations in the near term, and just take it one day at a time. Be sure to manage your risk appropriately. It's been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.